Hey guys, Mike here. So looky there. Did Santa Claus make an appearance? I don't know. Does he need to be on the milk carton anymore? Isn't it just crazy? Right now I say that jokingly, of course, because we got one day left. So unless there's some like just unbelievable rally tomorrow, which could be after day, right? What'd you see going up? Didn't matter whether it was good companies, hot garbage companies, everything was going up. We're gonna get into that. We're gonna go into why I was not surprised, and I'll show you how things laid out today and why it's important to kind of know these things and stuff like that. And also something we got to be looking out for, which I've been talking about, which is earnings, right? What's coming up? We're going to start hearing fourth quarter earnings from these companies. We're going to get into what you need to be looking for and why you can get a surprise either way. But again, this is one of those, everything rally type thing, right? I mean, it's banks, biogenomics, all the travel stocks all of a sudden. I guess everybody just started traveling again. Hey, how about that? All the precious metals, see ya. Your safe havens everybody's going into right now, the grocery stores and things like that for recession-proof stuff. Your Cathie Wood stocks. The only thing down today was inverse ETFs, by the way. And even crypto got some love. Look at that. Look at that. It's the security stuff. Yep, can't believe it. China stock's up again. I just don't believe what's happening over there. Oh my God, a NEO and XP make a comeback after being decimated yesterday. Then you got your Affirms, you got your PayPal, your SoFis. And here all of a sudden semiconductors, everything's solved, everything's fixed. Look at them going up, super green. Your Shopify's, your Robloxes, there's ArtK. Look at that, bouncing back over 30. Tesla, huge day again, 8%. All your big mega caps going up, right? VIX is down, it's completely broken, doesn't really matter. And then your indexes, I mean, up big, right? Even the Dow was at 1%, but risk on was what it was today, right? The dollar's down, yields went down. And so now I'll take you into why I wasn't surprised. Again, when you do a morning news brief before pre-market every day, that's why you don't get shocked by the moves. And it's funny because here's what I actually said this morning when I posted this on the Patreon and YouTube and the Discord. I posted everywhere. But I said right here, I said, hey guys, let's all get an early morning chuckle going here because here's the reasons why the indexes are up pre-market. Data showed applications for unemployment benefits rose last week with U.S. weekly jobless claims actually hitting what the estimate was, which is 225K, right? So bad for the economy. Stock market loves it. It finally actually hit the estimate instead of coming in under. That's bullish. Woohoo! And then, of course, don't forget the China reopening story once again. Here we go. And before I touch on that, I did actually put this down here as well, which I said, Max Payne's at 380 for the SPY today with a lot of puts at 370, right? Below where we actually opened. And why that's important is, I throw this in the Discord every morning, understand, look at that. Do you really think anybody's going to pay out that and let those go in the money? You're out your mind, right? So there's no way they were expiring today. And so that was not going to happen at all. It can happen sometimes, something crazy happens. But look at the puts versus the calls, right? This was yesterday. What'd they do? You had these two big numbers. I think it was 365, 370, and what they do, they kept us right around, I believe it was 382, if I'm not mistaken, to close it out for yesterday. And I'm going to get into Tesla in just a second, but the reason why I wasn't surprised because yesterday, as I'm going through trying to find news to update everybody on, it's showing news from yesterday, right? And all these different feeds. And what was the thing? Oh, the market's scared about the reopening of China is not the real deal. And then all of a sudden, 24 hours, we flip. Oh, the China reopening. I can't believe it, right? And of course, everything goes up. I mean, you got stocks that were worth $30 at the beginning of the year. They're literally down to like 75 cents, going up 20% today. Everything was going up. Didn't matter. If I had a pulse and it was still in business somehow, real estate stocks, you name it, was going up. It's one of those kind of rallies, right? And so it could be a number of things, right? Year end, people maybe they have losses to offset. It's like, hey, let me take the gains. Short coverings, you have to buy back the stock, obviously, to close your short, right? So that can obviously drive prices up. A lot of call buying, right? Forces market makers to hedge by buying the stock. I've showed you how they drove Tesla up before, and I'm going to get into that in just a second. As you can see right here, I put this in the Discord. So when I look at this right here, this is yesterday. Look at this, $1.83 billion of puts, right? It was the top of the deal with 171,000 contracts. And compared to the calls yesterday, is the second one, 55 million. That's it, right? And look at the day. It's amazing the difference in what one day makes. Here's what happened in the beginning. This went up, but I posted this at the beginning right out of the gates. 22 million in calls and only, 5 million in puts is the third one down right there. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And that's another thing that was going on. The put call ratio was so out of whack, right? The bearishness, things being oversold, which I'm going to show you. And this right here kind of tells you how this drives the dark pool activity, the options, how that drives the market. Look at this. This is the range right here, 110 to 124. That's what the dark pool activity, and then you see / public equity support and resistance levels give us, right? Well, you may think, well, what does that mean? Does that mean anything? You go, let's go to the chart. What was the high of the day? 123.57. So not quite to 124, but 110 was the floor. And you can see it barely went below it. But then what happened? It got to 110 and boom, bounced and see you later. And now we got this big gap right here that needs to be filled. We'll see if that happens. But the other thing to look at this thing on the weekly. Tesla is oversold on the weekly. When you get, it's hard to get oversold on the weekly and monthly charts, right? Look at Tesla. Let's go all the way back. When's the last time it was oversold on the weekly? One, it touched it in 2019, right? And then you got to go back 3 more years, 2016. That's how hard it is. And then look at the daily. Here's what's crazy. This stock has rallied, right? And it's rallied, and it's been a decent rally from 109 to 123 or whatever it is. That's almost 12%. And it's still oversold. That's what's even crazy about it. It's still in oversold territory. And so, yes, can it continue to go up? Absolutely, it can continue to go up. It's still, that's how oversold it was. Right, guys? Things got beaten down and they come back. There's nothing changed on fundamentals. Matter of fact, I went back and listened to that call he did where he's not going to sell in 2024 and stuff. And one thing he talked about, you saw a lot of selling after the call, and people were surprised. I can't believe he said he's not going to sell. I guess that's the only part of the call they heard was, he talked about Econ 101 and stuff and margins. One thing people really love about Tesla is they have these great margins. Well, he even said that's shrinking down. And that's what I was talking about when they're giving these discounts to try to get people to buy these cars and stuff. Yes, the margins are going to shrink. The big question is going to be, because what does Tesla do when they got coming up here, fourth quarter earnings? They usually report good fourth quarter earnings, right? And people, jump all over it and the stock will end up running or something probably. But in this case, the call is going to be the big one, and him talking about margins. What does big money think about that? That's the real thing. It don't matter what we think and how much people love it or anything. It's how do they accept the fact that margins will be shrinking? And there's the CEO who's usually blunt about stuff saying, it's not looking good for car companies right now. That's just kind of the way it is. But I won't sell my stock until not 2023, 2024, and 2025. Didn't talk about anything about buying stock, by the way. And so I'm curious to know what price he would actually buy stock at. That would be a good one. Another thing that came out today, and I don't know if it's true, it came out one source and didn't even hurt the stock, was by he was getting margin called or something. And I'll have to dig more into it. If you know anything about the details of how this Twitter deal worked out, and is he just selling the stock or is he actually putting it up for collateral, all this kind of stuff, and with these margin calls. It was only one source. That's why I was like, I'm not putting that in the brief, and I'm just curious to see if you heard anything else about that. But it wouldn't surprise me and stuff. And how would that affect? He jokes around maybe, or he's serious about putting Twitter into bankruptcy or something. Just not sure how that would work out with the Tesla shares and everything else. But I got to dig into that. I really do. I didn't want to do it, but I think I'm gonna have to do it now and see. But the other thing is, did you really think the indexes were gonna break those lows in October without a fight, right? And I showed you the Qs yesterday, and you can see obviously it popped. And it's only 2%, right? It was yesterday. Now it's about 4% away. But did you really think it was going down without a fight? Of course not. Of course not. And I've seen people call for these bounces to come up and down, because remember, it goes up, down, well, and then drop, right? But of course, what does all this depend on, right? That drop. I personally think the Qs, especially, big money's waiting to hear fourth quarter earnings before they try to plummet us. It could happen. Again, they like to try to think ahead, but here they're talking about first quarter being the apocalyptic thing where everything's going to go to hell in a handbasket. But here's fourth quarter coming around the corner, and what have you seen, right? Micron, disastrous earnings, barely fell. When you think about those earnings and what they're warning about, barely fell. Why? Because it's already had huge drops on first quarter and second quarter earnings, and then all of a sudden things went downhill, and they started reporting earnings in third quarter at least. You didn't hear nothing, right? And I think it was their first quarter they reported, not fourth quarter. They're a little off from the other ones. But either way, you didn't get those major drops because they already had those huge drops, right? And so to get them to drop way farther, you're going to have that capitulation moment for semiconductors and everything else. Because if earnings are dropping, if we're selling less EVs and less iPhones and all the stuff that take the chips and all the stuff they use, right? Well, that's not good for semiconductors. Plus, they have an inventory issue going on. And so they should definitely drop farther, Right now, you're not really seeing that right now. I mean, NVIDIA's been on a nice drop for sure, but it ran up. My God, that's a huge run up it's had. But that's the kind of stuff we're looking at. But you could see, don't be surprised in the first like 30 days of January, right? Or you'll start to see companies are going to start reporting earnings. And if they don't fall off the cliff again, people are like, well, that's not as bad as we thought. And here's what I'm talking about. And this chart right here will show you exactly what we're talking about. This is the projections for earnings for the S&P, obviously the companies within the S&P, and what they're projecting for EPS, sales, and then margins. And I don't know the colors because I'm colorblind. I think the white line that is EPS. I think that's a blue line for sales, and what is that, red, I think, for profit margin. And so that right there shows you how much earnings per share is projected to contract, and as well as margins. But what do you notice? Sales are not projected to contract that much. Matter of fact, they've been trading sideways, or in this chart, they're projected sideways since April, for crying out loud, and that's the last shoe to drop. For some reason, they aren't projecting sales to take a massive hit like they are EPS and margins. And that's why they're talking about, earnings compression, like this last phase, the third phase of the bear market, right? Finally, and this is where we come in, right? Oh, no, we're not going to buy any more iPhones, or not as many people we're going to. We're not going to buy 200 pair of Nikes right now. We're not going to go out and buy the cars and the houses and all this stuff in Walmart and Target and online at Amazon. We're actually going to start trying to either save money, or a bunch of it's going to just get laid off and not have any money to go out and spend. I think it's going to be a combination of both. But that's what everybody's waiting for, is the last shoe to drop is the consumer to finally say, okay, we don't have any money, or we're too petrified to go out and spend it because we're afraid we'll get laid off, right? Like our next door neighbor did or something. And so that just hasn't happened like people have thought. And you saw how it's been sideways since like April this year, right? 2022, that just hasn't fallen off. And people you're expecting that's what's going to happen, but we'll just have to see. Again, everybody keeps betting against the consumer, us, but I don't know, man. It's almost like, wow, maybe the consumer is a safe bet right now. We just keep spending and racking those credit cards up and taking emergency loans out on our 401ks and pulling equity out of the home to keep us afloat and all kinds of stuff. Eventually, it has to come to a head. And I'm going to talk about in tomorrow's video about what's happening with high yield corporate bonds. Those things are just falling. They've had a terrible year, but my God, people are looking, going, wow, okay, this ain't looking good. And I'll show you why and what people are talking about with that and what to expect. Because it's something you definitely want to pay attention to. And stuff like that. Just like if you want to pay attention to debt and credit markets, that's what this whole thing is based off of. That's where higher interest rates, them running the balance sheet off in the Fed, really comes into play. We just hadn't felt it yet. But remember, the last 12 years, the reason why you see a lot of people, especially YouTubers, have fallen to the wayside and were nothing but one-trick ponies is because they were lazy and all they knew was a bull market, a raging bull market that was propped up by the government for 12 years, right? Remember, the Fed was buying mortgage-backed securities, propping up the real estate market, and bonds. They were the biggest buyer of both for 12 years. Why? I don't even know. But anyway, that's what they did. And so all of a sudden it goes away and people go, what do I do? Everything's just not going up. I don't understand. And then we got into 2020. Oh my God, it was a whole different ball game there. And so now all of a sudden, wow, what do you do? It's a bear market. You better have a different game plan. So it's the way it is. So that's what we're working on, right? We're working on the Discord, on the Patreon, working at it here. And it's the best time to educate yourself, the most you can. Start writing it on paper, use an Excel spreadsheet, type in what you learned so you know it, because you know why? This ain't going to be the last bear market you ever go through, depending on your age, of course. But, I've been through, old enough to live through, 3 of them as an adult now. And so if you ain't noticed also, I think they're going to come faster and faster, right? And why do I think that? Because of the amount of debt in the world right now. These bubbles are getting bigger and bigger. And remember, if that China real estate bubble is ever allowed to pop, woo, that's going to be the biggest one ever. And I don't know what that's going to do. I have no idea. And eventually, we can't keep running up our debt. Eventually, it's going to come to a head. That's just the way it is. So anyway, hope you guys come out of it. Hit the like and subscribe button if you did. Really appreciate it. And I will see you tomorrow.